Hello, Hi again. Hello, Finimizers. Welcome to another Finimize Live. My name's Russell, one of the analysts here at Finimize, and I'm happy to host today's event. It's about how to invest in the future of alternative assets with our partner, Enky. First, we have some housekeeping to run through. Please feel free to introduce yourself in the chat, tell us where you're tuning in from, and remember to switch to all attendees so everyone can see your messages. This is going to be a 15-minute discussion followed by a 15-minute audience Q&A. Please use the Q&A box to ask a question. And if you see a question you like, upvote it so it moves to the top. That way we can get through the most upvoted questions first. Okay, so let's get started. Today's session is brought to you in partnership with Enky. If you're not familiar with Enky, Enky is changing the way we consume furniture through its flexible and attractive furniture as a service model. To fuel its growth, they've allowed private investors to co-finance the stock of furniture via their own fractional investment platform. As of today, more than 3,000 investors saved by investing in their projects in exchange for an 8% annual return with strong guarantees and a clear environmental impact. Now, of course, no finance event is complete without a quick disclaimer. So your capital's at risk. This isn't financial advice. And tax treatment depends on your individual circumstances and may be subject to change. With that out the way, I'm really pleased to introduce today's guest, Aissa Laroussi, the co-founder and CEO of Enky. Aissa is a successful serial entrepreneur whose previous venture was Edebex, a fintech and invoice factoring, which reached more than €1 billion in crowdfunded invoices. He then launched Enky to reinvent the way we consume furniture, also with a crowdfunding model. So Aissa, it's a real pleasure to have you with us. How are you doing?
I'm very good. Thank you, Russell. Thanks for the introduction.
Perfect. Great to have you here. So let's dive in. You'll see a pop-up poll in a couple of seconds. Let's kick things off with finding out how many of you already invest in alternative assets. And let's start it off. Aissa, please introduce yourself a bit and tell us about Enky's business model.
Yeah. So basically, like you said, Russell, we are indeed a furniture company. We basically created a furniture subscription model focused on B2B. So basically what we do is that in exchange for a monthly fee, we equip office spaces, hotels, restaurants, and different real estate projects. We take care of the logistics, the maintenance, etc. And the main advantages for our customers are obviously the fact that they don't have to invest upfront in the furniture, which can be quite costly. We offer greater flexibility for changing needs. And also, we believe that it's a way more sustainable model looking forward, as our model forces us somehow to extend the lifespan of furniture products. And obviously, like you explained, we combined it with this financing model. And so basically, the way it works is that every furnishing project, we need to finance furniture and we need to make some expenses. And the idea behind it is that we have to buy high quality furniture, durable products, which obviously tends to be expensive. And so we decided to create this model. And this model allows us, of course, to finance the furniture. And so the way it works is that investors are allowed to invest through bonds that are directly related to the underlying assets, so the furniture and also the future revenue, with an ROI, like you said, which is between 7 to 9%, depending on the maturity and the amount invested. And so the key advantages are obviously for us to be able to finance the capital needs, because we are talking about a large amount of furniture, and our investors obviously benefits from predictable returns backed by tangible and cash generating assets. And obviously what we also noticed is that it's a quite powerful marketing tool, because many of our investors are actually ambassadors and they kind of drive a very strong word of mouth, and there's like a real community effect to this model.
Super interesting. So it's kind of like asset-backed securities for like private sort of investors.
Yeah, exactly. But with the furniture, which is, I think, quite new. Yeah.
Absolutely. Yeah, sure. And is that you know, it's a fractional investment platform. Is that what can you kind of help define what fractional means? Because it was like, to be honest with you, one of the first times I've heard the expression.
Yeah, the thing is that many people, use different words. I would say it's more like a participatory or participative. So it means that there is one project and many people can participate, and somehow it's fractional because many people invest in one project. So you can invest from 500 euro to a million. I mean, there is no real limit. And basically the idea is, like I said, for every project, we need to finance a certain amount. We already know the revenues that are tied to the contracts that we sign. And so we create the possibility for these investors to take a piece of the contract somehow and get a part of the revenue we generate from the rent.
Okay, interesting. So do you think this kind of financing platform can help sort of like many businesses grow independently from traditional type of finance like venture capital or borrowing from banks?
Yeah, absolutely. I really think so. I think for many, asset-heavy businesses and cash flow generating businesses, this could be a wonderful way to finance their business, basically. And I think if you can show strong recurring revenues, if you have like tangible assets, I think this model could really work and be a powerful tool, like I said, for both being able to finance quite quickly. We are quite impressed by the success of this investment product. And in parallel, like I said, it really creates a community aligned model where the community is not only investing, but also really helping in, establishing this new way of consuming furniture. So definitely yes. And I think there are so many businesses that relate on like real assets that needs to be financed. And I think as we move towards more circularity, these kind of models where we try to rely on durable assets that can be where we can prolong lifespan of products, where we can have like usage, like many usage with many people. I think that's something really strong that will, I think, force this kind of models in the future.
So how would you compare this type of asset class, you know, in terms of risks relative to like investing in stocks or real estate?
Yeah. Well, I think every investment, like you stated before, there's always a risk. So I wouldn't say it's 100% risk-free, but I would say that it's more stable, more less correlated to like financial markets, unlike stocks or real estate where you are exposed to like potential massive market swings. This is a lot more predictable. And in our case, it's spread among different customers and projects. So I think, yeah, predictability for me is the key here, and no correlation to traditional markets.
So broadening out the spectrum a bit from here, yeah, when, you know, you've obviously experienced entrepreneurs set businesses up and everything, what's the most important pieces of advice you'd give listeners when considering investing in alternatives? Let's start with
Mhm.
for the first time.
Yeah. Well, I would say the first thing is obviously to start with something you understand. I think in these kind of, alternative assets, I think the underlying assets, the underlying business, how it generates income, how liquid the investment is, I think that's the most important thing. Obviously, it's important because these kind of investments are not the ones that you would see in like a traditional app where you could buy stocks and stuff like that. So it means that you need to find them. You need to understand what are the companies behind them, how transparent are they about the risks. So I think there is a bit of work in doing that, but I think more and more mature platforms and projects are emerging. So yeah, I think the key advice here would be try to understand what's behind the investment. And I think if that makes sense, then there is a lot of chance that it would be a good investment.
Okay, and getting more into something a bit more on the practical level here, what would be the first steps you'd kind of recommend for, potentially people to diversify their portfolios, into these alternative markets?
Yeah, well, I think the key today, because there are not so many and it's not so visible, I think the key is to find them. So our way of making ourselves visible was obviously working with like financial newsletters, as yours, for example, or financial investor influencers, etc. So I would say the first step, obviously, it's to find them. So like I said before, it's a bit of work, but I think it could be worth it. Then obviously you need to start with low amounts, see how it performs, understand and step by step grow your exposure.
Okay, great. Okay, there's quite a lot of questions coming in, so let's kind of switch across to them. So please, if you've got questions for Aissa, please put them in that Q&A box, upvote the questions that you think along there are most interesting. There's an interesting poll already. It looks like 36% of the people listening have already invested in alternative assets. So thanks for answering the poll. And 15% are planning to, and quite sensibly 49% saying I need more information before I could invest. So that's exactly what, I guess ICE is here to help you with those. So taking it from the top there, the top question up here is, do you see there being any limitations to alternative investing? Or do you think this will be an ever-growing universe?
Well, in my opinion, I think this is really there to grow. Like I said before, there is on one side, I think with the circularity growing, I think there are many possibilities of having these grow. And on the other side, we see also the interest demand for it growing. So I think it's well, obviously at some point, like anything, you will reach a certain plateau, but I think we are really far from there, and we are really at the beginning of something that could become really strong.
And are there regulatory things that kind of go on that restrict or not? There's always risks. Is it kind of more unregulated or?
Well, I think like everything, it depend on the volume, but I think the more you grow, the more this will grow. I think the more it will be regulated, and it's possible that in a few years from now we will see these are like we see any other like more traditional assets.
Cool. So next question coming out. As alternatives continue to diversify, are you seeing people spread their wealth thinner across a wider type of asset, or are investors pushing money from one alternative investment to the other? I suppose this is more like broad about what you've been seeing through your experiences.
Yeah, what we see is that again, people are trying with cautious at the beginning, obviously, and then once they understand it better, they see the returns, they see it's a more secure investment, they tend to go more. So we try to do an estimation. I think initially people think that they would invest like between 5 to 10% into this kind of investment, but then we see people going more into like 25, 30% and more, as long as they understand what's behind the investment.
Okay, good. So next one going down. So are these bonds that people would buy, are they secured against the customer contract specifically, or are they general bonds for general use by the company, but primarily used to buy furniture?
So yeah, so basically the way we built it is that we take the risk of our customers. So it means that our investors, if, for example, one of our customers don't pay the rent, it's not going to be something that our investor will be exposed to. So it means that we emit the bonds, and indeed, in case of a problem with us, then obviously the furniture and the future revenue are transferred to the investors.
Okay. Furniture, I guess, depending on which type of furniture, whether it's for hotels or or
Yeah.
businesses, yeah, but where do you source it from?
Yeah, so basically we have many suppliers in Europe. We have criteria, so we buy from manufacturers. We buy furniture that are really strong in terms of quality and durability. So that's for the new part. And now we also started sourcing secondhand furniture and also vintage, because now vintage has a very high, there is a hype with a lot of architects and designers who wants to furnish their space with like vintage furniture. And we also think that's a really interesting development, because it's great also in terms of investment, because the way we approach this in the past, we thought that furniture is meant to lose value over time relatively quickly. But now, as we are in this, we are more and more looking at some furniture can instead gain value, especially if you are talking about good materials, like, you know, solid wood furniture, for example, or also, you know, like I said, vintage furniture from some brands, etc. So these are gaining a lot of attention right now.
Has that surprised you about like how the duration of like the value of those of the furniture's lasted longer than thing, or were you kind of always hoping it could do?
No, these are things that we really analyze. That's the key to our business model, because the more the furniture can last and how the furniture can be repaired, or what will be the value of this piece of furniture in 10 years, 15 years, etc. Even with trends, these are things that we can anticipate, and we are really developing tools to do that, because the more the furniture can last long, and let's imagine like the perfect example where this piece of furniture can last 15 years and we can sell it for a higher price than we bought it, then it's the perfect investment, is even better than real estate. So these are really important criteria for us.
Okay, good. Next question will be moved down, and please upvote questions that sort of the things I'm going to just go down otherwise. So typically, what sort of coupons are attached to the ones? I think you said 8% for this. Is that typical for this type of investment, and the maturity? Sort of how long does this last for?
Yeah, I think maturity for us is between, I would say, 6 months to like 5 years. So it can be quite long. And indeed, the return is quite related to the maturity. And we adapt the maturity of the investments related to the contracts we sign with our customers. And we try also to create a smart way in our system to offer liquidity. So that's why we are even exploring like very short-term possibilities, like for 3 months, where we would offer this, for example, for bigger amounts or for companies, etc., etc.
You kind of touched on this a bit earlier, but allocations of for alternatives, what percentage do you think is the right amount? It's a
I think
difficult
that's
question.
at some point it's a very personal question, but like I said, from what we hear from our customers, they tend to start with like 5 to 10%. Obviously, we think it's low because we believe that these alternatives, they can be quite secure. Like I said, it's tied to real assets, to predictability, especially, I mean, we have been in business for 5 years, so it means we can really predict revenues from our contracts. So I would say personally I could invest even half of my portfolio into this, but it's because obviously I know it and this is something. But I think, yeah, I mean, people should still be careful and really look at, because one company, one opportunity is not equal to the other. And as we are in an area where this is not yet like, massively known, you need to do your homework, and you really need to know what in what solutions you are investing. But yeah, I think in the future it could become quite a large percentage of a portfolio.
I think fully understand what you're investing is always going to be a good strategy. Yeah. Okay, businesses have ups and down cycles. So the question here is, how do you protect yourself against the downside from business cycles? shutting down, cyclicality, whichever. Yeah.
Yeah, I mean, we are present in different markets. So, for example, we have office space as customers, we have hotels, we have real estate projects, etc. So for us, it's like we diversify. We like to have like different types of projects, which means, for example, if we talk about a crisis like we had with, obviously, like COVID is quite exceptional, but you could have like a crisis that will touch the hospitality business or, these kind of things. So in general, I think obviously furniture, people will need furniture for everyday use. So I think it's quite a strong and how to say that, high resistance market. And also, furniture, what we observed with companies that were sometimes in difficulties, because we had some projects where unfortunately the companies had to close and we had to recuperate the furniture. But we saw that we were the first, I mean, they continue to pay us very long, because without their furniture, it's quite hard to continue to, to run the business. So yeah, but in general, I mean, we really have a very positive. We don't have many issues with that. And obviously, I mean, if it's a massive issue, I mean, everyone is concerned, right?
I think COVID was unique, so yeah, that's
Exactly.
different. I'm gonna sort of like tie in a couple of questions here together about exiting the investment, how easy is there? Is there a two-way market? Liquidity. There's a few questions coming about the trading side. You want to just talk about that for a little bit?
Sorry, could you repeat the question?
So yeah, there's a few questions here about, are they tradable? Is there a two-way market? Another question, if I want to exit the
No,
investment,
right now
how
is
easy is
not
the process?
tradable. So right now you have a fixed contract and you have to wait the maturity that you signed up for.
Okay.
Then I see a
Sure.
question about no correlation. I would say, I mean, no correlation, I mean, not direct, I would say, because obviously if tomorrow people are emotional or there is like a decision on the market and, you don't have an impact directly on your investment if tomorrow the stock market crashes. Obviously, I think if you have a massive crisis and business is going less well, might be, but I think it's gonna be the effect is gonna be more long term than immediate, like you see with like traditional markets.
Sure, I think definitely, yeah. So then getting into some specifics about Enky itself, when was the company formed? How has it grown in terms of numbers? And then the next
Yeah.
question ties in with it about new projects, number of projects. So
Yeah,
something
we funded the company 5 years ago. So it took us some time to really find what we call usually in startups like the product market fit. We first tried with a product where people could buy the furniture at the end, and it was the only possibility. Then we changed it for a model. I mean, it's still possible, but people are not choosing it anymore. So now we have a model where it's 100%. I mean, it's pure rental. You don't buy the furniture, but it's almost half the price, and that is the solution that meets most success. And in terms of numbers, we put on the market roughly more than, I would say, between 5 to 8 millions of furniture value on the market. But since the last 6 to 8 months, we are growing really fast. We tripled in terms of the team size. We are today 22 people, but it's growing very fast. And we believe this market is really profound. So we are really at the beginning of what this could become.
Are there lots of competitors out there, or like the thing, or no one really does it your way?
I would say no one really does it our way. There are some competitors, but everyone is in a specific niche. So there are some people in like the B2C market. There are some others who are really focused on, big corporate, etc. I think we are quite unique with our funding model, and I think that's the strength. I've seen a lot of companies trying to do something like that, but the financial part is quite tricky. So yeah.
Okay, scrolling down the questions from Danny. Speaking about durable assets and noting REITs and SIPs, what's your view on the risk of investing in antiques? Or is it again a question of know that market better?
Well, obviously, it's like you said. I mean, it's knowing that market better. There is like always like a speculation in it, effect in it. Obviously, we try to not base our way of investing too much related to speculation. Obviously, our model is really more based on the future revenues that a piece of furniture can generate. And I would say that if a piece becomes, I mean, gains value, that's for us, that's like a plus.
Now we're getting into some more technicals here about the guarantee. Can you explain how you're able to kind of guarantee the capital? You know, is it the purchasing margin? Again, the value of the
Yeah,
furniture.
I mean, we can say that we have a model that is quite profitable. And like I explained before, the way we actually secure projects. So the first step is that unlike, for example, crowdfunding platforms where you invest in real estate and things like that, where you are directly impacted by, for example, the projects not going on, or a payment that is like a delay of payments, etc., etc. We are sure enough and we know our business enough to say we don't, so that risk is not transferred to our investors. So it means that we kind of deal with that with our customers, and the margin is comfortable enough so that we can offer this kind of return on investment. And obviously, the main risk would be that if something happens to us, basically, and the way we protect our investors against that is that we have the furniture and the future revenue of each contracts that are transferred as a guarantee for every investment. But I can also tell you that, I mean, our business is going super well. So this is like a really unlikely scenario, but yeah.
And scrolling down, it's the question, Enky's regulated financial service provider, French-based company owned by a Belgian parent, and it's not regulated by the UK's sort of FCA. So do you know what regulated protection is possible for a UK investor?
Yeah, I mean, we are working on that. So obviously, in every market, you have different regulatory statuses that you need for the amount you are raising. So right now we are under, I think in the UK it's like 5 millions, below 5 millions, and in France is below 8 millions. We are not there yet. So I think since the beginning we finance around 4 to 5 millions, but it's accelerating. And so we are working towards, being obviously regulated in every, I mean, in Europe and in the UK, because we have a lot of demand and we want to be able to grow with the growth of the demand.
Cool. I think we're coming to the end of the questions. Well, there's one more here next down, so we haven't touched on it yet, is noting sustainability, when we're discussing ESG, CSR, GSC. Do you just want to talk about a little bit about that? Because it was mentioned at the beginning.
Yeah, I think this is gonna be something that will obviously drive businesses like us, because indeed, I mean, we see more and more constraints from governments forcing companies to be more sustainable, etc., etc. And this is obviously forcing these companies to use services that are more sustainable like us. So for sure, yes.
Okay, great. I'm afraid, everyone, that's all the time that we have for today. Thank you so much. This is super interesting. Please, as you leave the event today, a pop-up survey will appear on the screen. If you can take a few minutes to let us know what topics you're interested in and hearing about future events would be great. Thanks for joining us, and I look forward to seeing you in the future. Thank you.
Thank you, everyone. And it was a pleasure.